Hi guys. So I wanted to walk you through one of my favorite chart patterns for trading, swing trading. Actually, it works very well for day trading as well. But and I mean it's just awesome as a swing trading tool. And it's called the cup with handle formation, right? And basically what happens is this is actually not a clean example. Unless I were to come all the way back here and show it to you, right? Because what happens is you have a stock that pulls back. It's in an uptrend. It pulls back, right? And it forms this kind of bowl-shaped formation, right? And then it'll come up and kind of go to the side, right? And here is the handle. This is the handle, right? And then it proceeds to take off to the upside, right? So I've kind of modified the pattern to suit um, the way that I like to see things and the way that I like to get into trades. And one of the things that's done is it gives me a much better risk reward profile, right? So and as a result, I end up making more money. And this is on the intraday, remember, because I don't trade single stocks, but it worked for me when I did trade single stocks back in my old job, and I used to use this pattern a lot to get into positions. Um, so you had it, this is close to all-time highs. You had it pull back again here and start higher, right? And what I like to do when we're this close to the overall high is I like to drop down here and maybe use the MACD histogram that I spoke to you guys about. It was at this point, it's either the webinar or the workshop, depending on what you attended. And look for the first time that the MACD histogram makes a higher low, so to speak, right? So it starts to lift, and that would be right here. If you can see it, it's right on that one right there, right? That's the bar. So that close, or even that close to that close, is where you want to get in, right? With an eye toward price coming up here and taking out this high, right? And that giving you the performance. And of course, if you remember what I taught you, the closest swing low is your stop, right? So on this trade, it would be your entry, where you would be looking to get in would be 55.04 or better, right? So right in that area. And your stop would be, let's just call it 53.5, right? So $2.50. Not bad in terms of risk. And of course, you can see that this one already played out pretty well, from 55.04 to 56 and change. But that's not even the end of it, right? Because I pulled back to show this to you guys, but then you can see that it really did some good stuff for you, right? And that's just one example of it working. Now you have it setting up again here, in my opinion, right? It pulled back, started higher, then dropped back, but didn't take out this low, right? So for my 2 cents, a 63.78 entry or anywhere thereabouts with a stop down here at let's call it 61. Let's call it 61, right? Give it plenty of room. So that would be back to even here, even thereabouts, right? So it would even be below here. And if price breaks down below here, you know for sure that that trade is over and you need to be gone, right? But that's the deal, and it's just an awesome pattern. It works really, really well. There is, of course, no guarantee that it will work here. I mean, theoretically, it was a pullback here and started higher, and then it took out this low, right? But that's why you keep your stops tight, okay? And that's what allows you to really, over time, accumulate and compound your retirement accounts to an extraordinary degree. Okay. I hope this is really helpful to you guys. I hope you like the chart pattern, and I hope you put it to work. I hope you practice with it and really make it your own and make an absolute fortune with it. Okay. Any questions? Ask the trader at theartofsimpletrading.com. and we'll see you at the next video.